think that because you've been filing your FBAR every year, you're fully compliant with US foreign account reporting. Most people do, and most people are wrong. There are two separate reporting requirements for foreign financial accounts, two separate forms, two separate agencies, two separate penalty regimes. Filing one does not satisfy the other, not even a little. And if you've been filing FBAR for years without knowing about Form 8938, you may have years of penalties sitting there waiting for you right now. I'm attorney Chad Silver, founder of Silver Tax Group. We work with U.S. taxpayers on offshore compliance, FBAR filings, and IRS defense. And this question, FBAR versus FATCA, comes up in almost every single client consultation we have. So today I want to break it down clearly once and for all. Watch this video till the very end, because in this video, I'll be telling you what each form actually is and who enforces it. The dangerous assumption that filing one means you filed both, the thresholds, because they are not the same. And finally, what the combined penalty exposure looks like and what to do if you have a gap. Section 1, what each form is and who's behind it. FBAR FinCEN Form 114. This is the Foreign Bank Account Report. It is filed with FinCEN, the Financial Crimes Enforcement Network, which is part of the Treasury Department, not the IRS. FinCEN. The FBAR deadline is April 15th, with an automatic extension to October 15th. You file it through the BSA e-filing system, not with your tax return. FATCA Form 8938, this is the Statement of Specified Foreign Financial Assets. This one is filed with the IRS, attached directly to your Form 1040, your regular tax return. It was created under the Foreign Account Tax Compliance Act, which is where the name FATCA comes from. Same deadline as your tax return. Two forms, two different agencies, two different deadlines, two different filing systems. The only thing they have in common is that both can apply to the exact same foreign account and both carry their own separate penalties if you get them wrong. This is not a redundancy. Congress created both requirements intentionally, and the IRS enforces them independently. Section 2, the assumption that gets people into serious trouble. I get this every week. A client calls, they've been filing their FBAR diligently for years. Their accountant handles it, they feel compliant. Then we review their full situation, and the question comes up, are you filing Form 8938 with your tax return? Silence. Most of them have never heard of it, and their accountant, who does great work on their 1040 and remembers to file the FBAR, never raised it either. Because Form 8938 only applies above certain thresholds, and a lot of CPAs either don't know to check or assume FBAR covers it. It doesn't. I had a client, we'll call him Robert. He was meticulous, filed his FBAR every year without fail. Had accounts in France and a brokerage in Switzerland. Combined value, well over $200,000. He'd been doing this for 8 years. When we reviewed his returns, Form 8938 had never been filed, not once, because nobody had ever told him it existed. 8 years of potential penalties on top of accounts he'd been correctly reporting somewhere else the entire time. Here's the bottom line on Section 2. FBAR compliance and FATCA compliance are not the same thing. If your tax preparer is not asking you about Form 8938 specifically, you need to ask them or call us. If you're not sure whether you need to be filing Form 8938, call us at 855-900-1040 or visit silvertaxgroup.com. We'll review your full situation confidentially and tell you exactly where you stand on both requirements. Section 3, the thresholds and why they matter more than most people think. FBAR threshold, $10,000 aggregate across all foreign accounts at any point during the year. Simple, one number, applies to everyone. Form 8938 threshold. This one depends on where you live and how you file. If you live in the United States and file single or married filing separately, the threshold is $50,000 at year end or $75,000 at any point during the year. If you're married filing jointly, it doubles. $100,000 at year end or $150,000 at any point. If you live outside the United States, the thresholds are higher. $200,000 at year end for single filers, $400,000 for married filing jointly. Here's what this means practically. If you have $15,000 in a foreign account, you owe an FBAR. You probably do not owe a Form 8938 unless your total specified foreign assets push you above the threshold. But if you have $60,000 across foreign accounts, you owe both. And the accounts that trigger each form are not always identical. Form 8938 covers a broader category of specified foreign financial assets that can include foreign pensions, foreign partnerships, and certain foreign investment vehicles that may not all be FBAR reportable. The point: you cannot assume one threshold answers both questions. They operate independently. Section 4. What the penalties actually look like when you have a gap on either form. FBAR penalties, you've heard these from me before. Non-willful, up to $10,000 per violation per year. Willful, the greater of $100,000 or 50% of the account balance per year. Criminal exposure for willful violations. Form 8938 penalties separate, and on top of any FBAR penalties. Failure to file $10,000. If you don't correct it after IRS notice, and here's the one that shocks people. If you fail to disclose a foreign asset on Form 8938 and the IRS later finds it, the statute of limitations on your entire tax return stays open indefinitely. The IRS can go back and audit years that would otherwise be closed. A client, we'll call her Elena. She had correctly filed FBAR on her accounts in Italy for 6 years. Form 8938 had never been filed. When we calculated her exposure on the 8938 gap alone, separate from any FBAR question, she was looking at $60,000 in failure to file penalties on accounts she'd been reporting to FinCEN the whole time. The longer a Form 8938 gap goes unfiled, the worse it gets. And unlike FBAR, there is no streamlined equivalent program specifically for Form 8938 gaps. You address it through amended returns and reasonable cause arguments, which is exactly what we do. At Silver Tax Group, we evaluate your full offshore reporting picture, FBAR, Form 8938, FATCA, all of it. We build your compliance strategy, we implement it, and we'll defend it if necessary before the IRS. No guessing, no fear, just strong legal tax firepower on your side. Don't wait until the IRS comes knocking at your door. If you've been filing FBAR and you're not sure about Form 8938, or if you've never filed either one, call us at 855-900-1040 or visit silvertaxgroup.com for a confidential review today. We'll tell you exactly what you owe, what you don't, and how to close any gap before the IRS does it for you. I'm tax attorney Chad Silver. If this helped you understand the difference, click like below and subscribe. I'll see you in the next one.